everyone, and thank you for joining us. I hope today finds you safe and healthy. My name is Kimberly Weisul, and I'm an editor-at-large at Inc. I'll be your moderator for today's National Small Business Town Hall. It's the sixth in a series of weekly town halls designed to help business owners get through the coronavirus crisis. At Inc., we are always looking for ways to support entrepreneurs, and one way we've been doing that is with our ongoing coverage of the stimulus package and what it means for business owners. I'm so pleased that today we're partnering with another champion of small business, the U.S. Chamber of Commerce. I'll be joined by Neil Bradley, the Executive Vice President and Chief Policy Officer at the Chamber. After my conversation with Neil, we'll be taking your questions, and I'll be introducing a panel of experts to help answer them. We generally get hundreds or even thousands of questions at these events, but we do have a moderator working behind the scenes to make sure the questions with the most likes get to the top of the queue. So even if we're not able to answer your particular question, we hope we will be able to answer a similar one that will be helpful to you. Before we get started, I'd like to thank Comcast Business for underwriting today's town hall and the information we're bringing to you. For those of you who are not familiar with Neil Bradley, he has over 2 decades of experience working directly with high-level policymakers. At the Chamber, as the Executive Vice President and Chief Policy Officer, he is responsible for aligning the Chamber's overall policy priorities and advocacy efforts. Welcome, Neil.
Kimberly, it's great to be with you again.
Thank you so much for joining us. This has been a great series of conversations, and I'm really looking forward to continuing them. We have a lot to talk about this week because, as you predicted, the Main Street Lending Program is going to be open to companies quite a bit smaller than originally planned. But before we get into that, we still have a lot on the Paycheck Protection Program. I already see a lot of questions coming in on that. So the first swath of $349 billion for the Paycheck Protection Program ran out in less than 2 weeks. We're expecting this money to go fast too. If you don't have an application through yet, is there any point in joining at the end of the line at this point?
Well, I think if you think you need the money and you would take a Paycheck Protection Program and you have a lender who's willing to accept an application, I would go ahead and put one in. Principally because we don't know what Congress is going to do when this money runs out. It's possible that they elect to do some type of new program. It's possible they decide to replenish this program as they did once already. If they replenish it and you want the loan, I'd rather be in line at that time than not be in line.
So this version of the program sets aside some money for smaller banks, community banks. Does that change where you should apply at this point? Any particular advice on where to apply if you haven't already?
Well, there is $60 billion that's set aside for smaller lenders. We're starting to see that money go quickly too, from our understanding, our conversations with the SBA. But yes, if you deal normally with a very small community bank or a credit union, for example, or a CDFI, and they're participating in the program and they're in your neighborhood, I would definitely talk to them and find out if they can help you process your loan application.
Excellent. As businesses do start to receive funding from these loans, it seems like the next round of questions is how do we make sure we get loan forgiveness? Because those are sort of confusing rules. So what do people need to do to make sure that that loan is forgiven?
So the first thing is to understand that this is a 2-step process. In step 1, you're trying to figure out your maximum amount of potential loan forgiveness. And that's really governed by what you spend in the 8 weeks after the loan is originated. So for the 8 weeks after a loan originated, what you're spending on payroll costs, the very same thing that you use to apply for your PPP loan, plus utilities, plus rent, plus interest on your debt. You're going to want to keep track of all of those. And that makes up, as long as 75% of it is for payroll, your maximum amount of potential loan forgiveness. That's step 1. Now, once you understand the maximum level of loan forgiveness, there's the possibility that that can be reduced if you've reduced your employee headcount and you haven't brought people back. If you've cut wages by more than 25%, then that part that you calculated in step 1, that's going to be reduced further. Now, because we understand that many employers already had to furlough or lay off people, there is the opportunity to bring them back and avoid that penalty reduction. So you just want to think through about, as you got your loan, those 2 steps. Maximize the potential loan forgiveness in step 1. Make sure you're not getting penalized for reducing headcount or wages in step 2.
So now that business owners, some of them at least, have these loans, they can bring people back on payroll, but they don't always have work for them to do. So now we're seeing a lot of discussion about, can more of this be used for non-payroll expenses, or could we possibly extend the period for forgiveness? How should business owners plan, and what should they expect to see?
Well, you should start by planning with what you know. And what we know at the moment is that the rules are that 75% has to be used for payroll in terms of that step one calculation of maximum loan forgiveness. It's always possible that Congress could change its mind and change some of those rules going forward, or lengthen the amount of time that you use to calculate that. But you shouldn't bet on it, because there's no guarantee that Congress would do that. The other thing to remember is it's counterintuitive, but Congress designed this program as a way for small businesses to keep their employees rather than laying them off and putting them on unemployment. So the folks who came up with this program, they thought and they anticipated that you might be paying employees who actually physically can't come to work, who aren't providing services, but they would rather pay you through the Paycheck Protection Program to pay those employees rather than you laying them off. So it's hard and counterintuitive sometimes, but that was the intent of Congress.
Yeah, we are deep in the realm of counterintuitive. So yes, thank you for emphasizing that. Other thing that was counterintuitive, as we've written about on Inc.com, as have many others, there's been some large public companies taking these loans. Treasury has been saying they're going to be taking a closer look at some of these loans. Assuming you're not the LA Lakers, what do you have to know about the scrutiny that these loans might come under?
Well, so if you're the LA Lakers, you should plan on scrutiny,
right.
not just for your basketball performance, but for also in the PPP program. If you've taken a loan for more than $2 million, they've already announced that you'll be audited, that they'll look at that when they review the loan forgiveness. If you're publicly traded, you're likely going to get scrutiny. If you have venture capital or private equity investors and you still got into the program, decent chance that there's going to be some more scrutiny. But listen, if you got a $200,000 loan, you're a small business on Main Street, you can easily show that you were closed because of a stay-in-place order, or that you lost revenue. You're doing the right thing. You're not gaming the system. You don't have anything to worry about. This program was intended to help you. You're using it the way that you're supposed to be using it. And I wouldn't worry if you're the normal small business on Main Street about any of these headlines that you're reading.
Excellent. Good advice. Thank you. So a lot of businesses, of course, do not have a paycheck protection loan, and they're probably not going to get one. That means that they could be eligible for a tax credit for employee retention. Can you talk through that option and what people should know?
Yeah, so we spent a ton of time talking about the PPP, but another benefit available to all employers under the CARES Act is an employee retention tax credit. It's a $5,000 tax credit per employee. There are two ways that you become eligible for the tax credit. One is that you were partially or wholly shut down as a result of a governmental order, the stay-in-place orders, shelter-in-home orders that we're all experiencing. Or you've experienced a 50% drop in gross receipts in a quarter compared to the same quarter a year ago. If either of those apply to you, you're eligible for this program. There are two sets of rules based upon the number of employees that you have. If you have more than 100 employees, the tax credit applies to wages that you're paying employees when they're not providing services. So they're not doing their normal work, they're not doing other work that's been assigned to them, but you're still paying them anyway. If you have 100 or fewer employees, the tax credit applies irrespective of whether or not the employee is providing services. There's one big caveat, I think it's the reason that a lot of people have overlooked this program, is that if you take a PPP, you can't also get the employee retention tax credit. But if you think, as you pointed out, that you're not going to get a PPP, that's not in the cards. You should be paying attention to this employee retention tax credit. It's refundable to you as the small business, and that's a pretty attractive way to help offset some of the costs of paying your employees.
So given this is not something that's administered through a bank, Who do you work with for this, and how do you get it quickly? We usually think of tax credits at coming at like the end of some year that to be determined. So how do you think that through?
So this is all administered by the IRS. If you go to the IRS's website, I think they're now up to 90 Q&As that walk through in quite a bit of mind-numbing detail in some instances, all the parameters about this, but it answers a lot of those important questions. What it's refundable against? Short answer is the employer portion of payroll taxes, how you can receive that, how you make your calculations. One thing not to overlook is that your healthcare costs as an employer that you're paying for your employees, that can count as an expense towards the credit. So take a look at that FAQ. We have a quick guide to it on the U.S. Chamber's website, but that's a great place to go to begin planning how to get that tax credit.
Excellent, thank you. And as we thought might happen when we spoke about the Main Street Lending Program 2 weeks ago, you had sort of predicted that it might be opened up to a wider range of companies. Turns out that has happened, not just on the small end, but also larger companies as well. In some cases, I think a company with as little as $83,000 in earnings before interest, taxes, depreciation, amortization can qualify. So how do you go about figuring out if this is a loan that's going to help you?
Well, yeah, there's lots of calculations. I prefer to simplify it. The minimum loan in this program is $500,000. So you can't get a loan, you get it from a bank, but you can't get one for less than $500,000 under this program. So if you were going to apply for a PPP loan and it was in the $500,000 or more range, then you should definitely look at the Main Street Lending Program because it's probably a good match for you. There's some different rules. It's a loan. It's not a grant. There's no forgiveness. You do have to pay it back. It operates more like a traditional loan in terms of underwriting. But if you were thinking about that, I was going to get a $600,000 PPP. You didn't. Check out the Main Street Lending. Talk to your bank, your financial institution. You go through them for this program.
Right. And how, if you have multiple lenders, how are you going to work with them? Because they, in a sense, have to approve this loan, right? Even if they're the one who's not making it. So what's your pitch to them? How does that work?
Well, they are the ones making the loan. So they're making a loan to you just like they normally would, except they get to have part of that loan purchased by this vehicle created by the Federal Reserve, which helps them make that loan to you. So it really is going to your financial institution. If you deal with multiple institutions, you might want to talk to them. There are some rules about this. So once you hit the maximum loan, there is a maximum loan of $25 million or this limitation based on EBITDA that you described just a minute ago. You can't get around that by going to multiple banks. So go to whoever you principally bank with. If they're participating in the program, lenders do have to elect to participate. If they're participating, then talk to them about how you might be able to get this loan.
So as you said, this does not come with forgiveness, but there are some conditions. One is that you're supposed to make commercially reasonable efforts, that's a quote, to keep your employees if you get one of these loans. What does that mean?
Well, it means the normal business decisions that you would make. Here's what they don't want happening. They don't want you taking a loan and making a decision that for non-business reasons that you're just going to lay off a lot of your employees today, and that you're just going to totally revamp the business and go in a different direction. If it turns out that you're taking the loan and demand is down, revenue is down, you cannot support the operations that you had, and you make a business-based decision to reduce your headcount, that's permitted under this program. So it's just designed to prevent people from taking an undue windfall using this loan program because it is a low interest loan. They don't want people taking it who don't need it and aren't trying to continue their ongoing operations.
So this is a $600 billion program. It sounds like a ton of money, but with the PPP, we're learning how fast that can run out. Are you expecting there to be a run on this as well? I mean, these are larger loans, so more money.
They are larger loans. There's more money. This is, well, the initial seed money was provided by Congress. This is an agreement that's worked out between the Treasury Department and the Federal Reserve. And so they still have some room to increase the program or to add additional programs if it's necessary. I didn't do a great job predicting the demand on PPP. It turned out to be a lot stronger than even I thought it was going to be strong. I didn't know it was going to be quite that strong. I don't know how strong this is going to be, but I do know that the Federal Reserve and Treasury does have some additional room should additional support be needed.
Why do you think this might not be as strong? Is it because there's no forgiveness or because of the underwriting? What are you thinking?
Well, so you have a couple things. So you have underwriting on one end. You are talking about larger employers, even at the small business. If you're taking out a $500,000 loan, it's a little bit bigger loan. You're a bigger small business here. It also comes with some strings attached to it, right? So there are restrictions on executive compensation, dividends, stock buybacks if you're a publicly traded company that go along with this loan. Those were conditions imposed by Congress. And so to the extent that you think about people on the larger end of the spectrum who might be publicly traded, for whom this program is designed for, they have to give up some things in order to access this loan.
Gotcha. That makes sense. Thank you. Another thing, we always try to provide a look forward here if we can. And this most recent stimulus, it was referred to as either 2.5 or 3.5, depending on who's doing the counting. That implies that there's going to be more. Do you expect to see that? What might it look like and when might we see it?
I do think we have another bill. I think remembering that this bill, the 3.5, I call it 3.5 in my counting, took them over 2.5 weeks to get done. This next bill, which will be much more complicated, is not coming in a question of weeks. At best case, my prediction is Memorial Day, at best. It can easily slip past Memorial Day. I think Congress is going to do a couple things. There's some gaps. There are some technical fixes. There are things that they want to do in this bill for businesses. So I think there'll be some business component to it. There's definitely going to be money for healthcare and the healthcare response. Likely will be a big debate over support for state and local governments, but they're also going to begin to tackle the issues associated with reopening the economy. Reopening is maybe even more complicated than shutting down. And so there's going to be resources and support, regulatory, legal clarifications in this bill. That's why it's going to take so long to work out. But a bill will get done, in the next 5 or 6 weeks.
Great. Okay. Thank you very much. Neil, that was my last question of this part of the conversation. I know we'll be going back to a lot of these topics in the Q&A. Right now, though, I would like to introduce our first panelist. That's Jody Padar. She is the CPA and Vice President of Strategy for BotKeeper. Jody, now that some small businesses do have their paycheck protection loans, what are you advising them in terms of record keeping and making sure the loans get forgiven if appropriate?
Right. So it's complicated, right? So this is not an easy thing to think about. Everyone rushed to get their PPP loans thinking, okay, the government was going to help them with a grant of money or give them a loan. And what happened last night is we actually got rules from the IRS saying that it's that there's an M1 adjustment is what we would call it from an accounting perspective, right? So there's a book to tax difference, meaning the way you're going to have to do bookkeeping or accounting around this is going to be different than what a traditional cash basis taxpayer is doing, which is really what most small businesses are, right? So cash comes in, they record it as income, cash goes out, they record it as an expense. Well, basically what they did with this PPP loan is they said, okay, the cash coming in is not recorded as income, as well as the expenses going out are not going to be tax deductible expenses. So if you're a bookkeeper or your wife is a bookkeeper, right? Many small businesses have someone like internally. That means there's a whole new set of rules that you're going to have to be aware of as to how you treat these things, right? So, and I think the really important thing is that when you look at the PPP loan too as well, it didn't come like at a straight quarter, right? It's not like you can say all of Q2 is going to be all PPP or all not PPP, right? So you're going to have weeks and you're going to have to do adjustments and things like that. So, the best advice that I can offer you is to make sure you have a relationship with a financial professional, a CPA, someone who can help you figure out these rules. Because again, if you don't follow the rules correctly and you don't do the accounting correct for them, you may not have them forgiven, which isn't the worst thing in the world. It's still a 1% loan, but you need to think about that. And at BotKeeper, what we do is we have lots of accounting firms who are our partners who can help you figure out those rules. But again, now is not the time to not be, I'll say penny wise and pound foolish, right? Make sure you're working with your CPA or with your accounting professional to help you, because you don't want to go through all these rules and then come to find out that you're not able to get the loan forgiven or
Jody, thank you
correctly.
Oh, sorry, I didn't mean to interrupt you. Thank you very much. I'd next like to introduce Lenore Horton. She is a partner at the law firm Fisher Broyles. Thank you for joining us today, Lenore. Lenore, one question. Good. Off mute. We're doing well. One question we've been getting about your employees is really sticky here. What if you are ready to reopen on some scale, but your employee doesn't want to come back to work because they are concerned about their health? They don't believe it's safe. As an employer, what are your options?
Right. So if you're dealing with someone who has just a general anxiety about returning to work because of a general fear of catching COVID or becoming sick and developing COVID, that's not something that's covered in terms of having a justifiable reason for refusing to return to work. First, I think from an employer standpoint, what you want to do is delve a little bit into their reasons why, get a better understanding as to what is the basis of the fear. Is it just a general anxiety? Employers need to take into account ADA laws. They need to take into account workplace safety laws, OSHA laws. They really want to make sure they're understanding what's in play. So if someone says, I'm concerned about coming in, I'm scared of catching COVID because I have someone at home that I'm caring for. I'm afraid of coming in because I believe I may have COVID and I've sought a diagnosis. Those are things that trigger issues under the FFCRA if they have an employer with fewer than 500 employees. And so then you need to be careful about saying that they cannot come into work. The Department of Labor has already said that the period for non-enforcement of FFCRA requirements is now lifted, and they have started enforcing a failure to comply with those provisions. So you want to see, is there, does this qualify for paid leave at home or a period of unpaid leave at home under the FFCRA? Is this a disability issue where they are required to make some sort of accommodation under the ADA? Of course, it's also going to be state specific. Let's jump ahead and just assume, for purposes of this scenario, to say that it's just a general fear. I think from an employer standpoint, you have to look at what the law requires and then look at what kind of company culture you want to have. And because it's much more than just what the legal baseline is. That's the approach that I always recommend with clients. You have to think about what sort of employer you want to be. And if there are ways that you can address the fear, I think in general, then I think there should be some effort by the business to say, this is what we're doing to help make you safe. These are the actions that we're taking. That goes a long way in terms of the company culture. And I always say, if you've got an employment problem, don't always use a legal hammer for that nail. There are a lot of tools in the toolbox for dealing with it. We're starting this. Oh, go ahead.
Oh, did you want to? I just wanted to move on. Did you have another quick comment?
Well, ultimately, it's an issue of, have they refused work and are they quitting work, or do you have a basis for terminating them for cause? That, of course, makes people concerned about their unemployment benefits. And just yesterday, we saw some news about that out of Texas, where the governor said, even if somebody refuses to return to work, if they don't normally would qualify for benefits, we will extend benefits in limited circumstances.
Okay, that is interesting to know, I think, for everyone. That could shape what happens in other states as well. So thank you very much for that. I'd next like to introduce Dan Martini. He is the Vice President of Congressional Relations and Public Policy for the American Bankers Association. Dan, thanks for joining us again.
Yeah, thank you for having me. Always really appreciate the opportunity to speak with you.
Yeah. So we know last time around that 349 billion flew out the door really fast. Do you have a window for us on what it looks like this time around?
Yeah, so the most recent numbers we've seen publicly released were from 5 o'clock Eastern on Wednesday. Since that, at that time, about $90 billion in loans were approved already. These loans definitely skewed towards lenders from smaller, with smaller asset sizes. In fact, about half of that was from lenders that had 10 billion or less in assets. About 20 billion came from those between 10 and 50 billion in assets, and then the remaining sort of 25 billion in there came from some of the larger lenders, the greater than 50 billion. Now, since we haven't seen numbers that since that time, the average burn rate has been about 2 to 3 billion per hour, at least up to that point on Wednesday. So depending upon when we see future numbers released from Treasury or SBA, I would anticipate that there are still a fair amount of funds left. My guess right now is probably about a third of the pot is remaining. But again, that's just speculation based upon how we saw the drawdown up to Wednesday at 5 p.m.
Great, thank you very much. Next, I'd like to welcome Elisa Henrickson. She is the owner of Gray Search and Strategy. Welcome, Elisa.
Thank you very much. I appreciate it.
So, Elisa, what interesting things have you seen business owners do to help their furloughed employees stay engaged and interested in the business and to increase their chances that those people are going to want to come back?
Yeah, that's a great question. So we work with companies across the US, and I will say number one and the most important thing is the communication. So you can't go dark during this period. No matter the situation you're in, they have been over communicating for that matter. So some have created newsletters. They actually didn't have a newsletter before, but now that's the easiest way to connect with everybody and to let them know, here's the situation that we're in as a business. You know, we're all going through it. They're showing a lot of empathy. They're talking about the things that they're doing, and they're really showing encouragement on the things that they are doing during the time to bring them back, what they can do even from a health perspective. They're also outside of that, they're doing book clubs. That was another interesting thing. We know that we all don't have all the time, especially me. I've got a 5 and an 8-year-old at home, so I'm homeschooling, but they're trying to mix it up to do something a little bit different to keep that engagement. The other is training. I mean, there are so many free tools out there for training, and to provide a page in that newsletter or an email to your employees that gives a list of different links to different trainings. That's been really big for them. And then I'd say the last thing has been going back to the homeschooling piece, a lot of free tools for children. And I have loved the outreach from employers to employees and saying, we know you're home. We know you're home with your children. So here are a list of links for you to help keep your children busy during this time. So again, all around communication, all around engagement, just to keep that activity and that open communication going.
Great, thank you for that. And I love the idea of the employer kind of acknowledging that their employee or their former employee is in different circumstances right now and has, you know, different challenges. So I'm going to go to our questions here. The first one is actually about the EIDL loans, which you have not talked about yet. I'm going to ask Neil to answer this one. This question comes from Brian, who says, thanks for hosting town halls. You're so welcome. We really enjoy doing them. We're happy to help. The question is about the EIDL loans. I have been going to the SBA website several times a day since last Thursday, and the notification that says lapse in appropriations is still there. Any idea when we will be able to submit applications again? This was a program that was refunded. Neil, do you have any idea when people are going to be able to get some applications through?
It was refunded. We will check on that. I don't have a great answer for you. I'm surprised that that's still the case. Admittedly, I haven't looked in the last couple of days, but that should be lifted. They've gotten their appropriation and their apportionment. I do know that, like the other programs, they're having a hard time with their processing. And they had a tremendous backlog on the EIDL program and had problems on the technology side. So that may explain a little bit of what's going on there. But we'll check out and we'll have a better answer for you when we get back together.
Okay, we now have a question from Jack about one of the particularly confusing elements of the PPP that I think Lenore and then maybe Jody, if you have something to add, can answer. Jack asks, are there definitive rules for paying K1 partners to have a loan forgiven? What evidence is required? This K1 income has been misunderstood and confusing. So Lenore, how should it be treated?
Right, so guidance was issued and is now published in the Federal Register, which means that it is effective as of now concerning the inclusion of partners in a partnership as part of the loan application. On the question of forgiveness, obviously we're still waiting on forgiveness guidance from the SBA and from the Treasury. But I would say that you want to document like you would for any other payments that you intend to use in your forgiveness application. For one, the payments to the partners cannot exceed a $100,000 per year salary basis. So that's the first thing. If you were to view it as a salary payment, a gross salary payment, it cannot exceed $100,000 per year. So you want to divide that by the corresponding weeks, and that would be the maximum I would tell you to take a look at in terms of forgiveness and making the payments there.
Excellent. Jody, anything else about K1s that we know?
Just so that people understand, a K1 is essentially a way a partner in a small business potentially gets paid. So it's the alternative to a W-2 for a lot of business owners. So just really important substantiation, because if the intention of the law was to forgive or to help with payroll, that's it. It's a K1 is an alternative way of payroll getting paid for a business owner that is not getting a W-2.
Right. So you would think that that then counts in your payroll calculation and your forgiveness.
We would assume, as a CPA, based on my experience, I would think it should. And then a lot of K1s also have guaranteed payments, which are especially, a salary replacement thing, which is why it came up, right? Because everyone's saying, hey, I get a K1, I pay self-employment taxes. Why aren't I eligible for this PPP loan, right? So if the intention was truly to eliminate unemployment, that's just an alternative way that small business owners get paid.
Great. So we have another accounting question for you from Randy. This one has 239 likes on it. And the question is for the PPP. You know what? This question just vanished from my screen. I'm going to try to remember it. The question was for forgiveness on the PPP loan. Can you use vacation pay and bonuses as part of your payroll calculation, and can you pay them now instead of later in the year as you normally would?
So I'm not sure on the detail on that, but I think the important thing to think about is as you're going through kind of bringing folks back to work, and the rule says as of today that when the loan starts is when you have to start doing payroll, right? So how do you want to approach that? What kind of work are you going to give your people, or are you going to let them just stay home and have it be kind of an unemployment replacement? So, I mean, there's lots of details around it, and we don't know all the details yet.
Yeah, Neil, do you have something to add there?
Yeah, I just want to advise folks to be careful, right? You want to think through about what you're doing and whether you're going to be accused, particularly if you're audited, of gaming this system. If you normally were paying or accruing vacation or a bonus in this same period in a normal year, and you're following your normal course of business, do that. If you're trying to pull income, and we've heard extreme examples of this, I'm going to pay everyone in 8 weeks, and then I'm not going to pay them for the 6 weeks following. Do not do that. That is the kind of thing that when they take a look at it, they will deny your ability to have that loan forgiven, because they will assume you are gaming the system when you do that. So just operate your business like you normally would and play by the rules.
Great, thank you. I think that's always good advice. Thank you. We have a employment law unemployment question for Lenore now. This comes from Barbara, and again, 170 people are curious about this one. It says, how should an employer who has received a PPP loan handle an employee who's receiving unemployment checks that are more than the PPP payment? If the employee wants to keep the unemployment check, do they have to resign?
Okay, does the employee have to resign? Well, what that employee is potentially facing is an unemployment insurance fraud issue. The employer should be reporting accurately any changes regarding pay and rehire to the commission and making sure that they follow the requirements to update the commission, the unemployment commission as appropriate concerning any reporting that they've done and any inquiries that they've had from the UI divisions. So that's the first part of it. If you are aware that an employee continues to claim unemployment benefits and you believe that it's a fraud issue, there are ways to report fraud like that. And at some point you may want to make a decision to say we cannot in good faith continue to employ you in this manner and need to give the position to a person who is actually not looking to do this. But does that employee have to quit? I think the best interest here is not to do something that's going to get you in trouble. Unemployment insurance commissions have told employees, you've got to pay that money back. You received it, and we now have a determination that's definitive that you are not entitled to that money, and we're going to charge you back for it. So it's not free. I imagine there's going to be a lot of work on the back end of all of this to ensure that people have not unfairly deprived funds from these coffers that could have gone to people who were truly entitled to them.
Yeah, I think fear of fraud and getting charged for that money should be a good incentive if it's not a work ethic for people to get back, right? Those are pretty heavy penalties. This is a question I'm going to ask Neil about because I think we have spoken about it before, and it has to be with the payback time for the PPP. It comes from Matt. He says, if I pay wages to employees that is greater than their quote unquote normal wages over the 8-week period following funding, will I end up having to pay back the excess wages? And basically the confusion here is that the loan is based on 10 weeks, but the time to pay it out and qualify for forgiveness is 8 weeks. So there's just a little confusion about those time frames, ongoing confusion. And then maybe we can go to Jody after.
Yeah, I've been actually trying to figure out if Congress could have made this even more confusing, and I'm not sure it would have been possible. Yeah. So you're exactly right. You're borrowing based on 10. You're getting forgiveness based on 8. But remember, you borrowed only off the basis of what you were paying in terms of payroll compensation. You can get forgiveness for other things, utility payments, rent, interest on debt during those 8 weeks. And so those things add on to that. That should get you, may get you, depends on what your expenses are, closer to that 100% of full ability to have the loan forgiven. But that's the reason for the difference between the 8 weeks and the 10 weeks. You can count other things for loan forgiveness purposes.
Gotcha. Thank you very much. Yeah, you're right. It's completely confusing. Jody, anything else on that 8 weeks versus 10 weeks that people should know?
Yeah, I mean, I think you have to go back to what's ordinary and necessary business expenses, and that's kind of how we look at things from a tax perspective. So if you're looking for something to get forgiven and it was kind of customary in how it was working, then, you know, it most likely will. But we're saying 8 weeks because technically the law says 8 weeks now. So, you know, I would go with what it says today, not with what we expect to happen or what could possibly change. And the AICPA is advocating for a lot of these rules to change further down the road because we know in the details that they're not practical. And I think that's really important when you think about it, is like when Congress enacted this stuff, they didn't necessarily think through all the details because they didn't know. And so now, you know, from an implementation standpoint, we have to go on what the law says today, but just, you know, be aware. And if you're doing things the way you should be, you know, worst case scenario, it becomes 1% as opposed to free.
Thank you very much. You know, we are often asked for sort of more detail on self-employed and 1099 workers. Big question from Brian. Has the SBA outlined the forgiveness requirements for self-employed or sole proprietors who receive PPP loans? How would you get one of those forgiven, Jody?
Same rules, right? Like you're going to have to create, essentially, I believe it's going to be some sort of reconciliation of how this money was spent, right? So, you know, right now what we've done is based on regulations and things, we've kind of created these spreadsheets a lot of CPAs have of what's going to be forgiven, what's not going to be forgiven, how it's all going to play out. But ultimately, there's going to have to be some sort of form and substantiation that you're going to have to give back to the government, right? And so what's going to happen is it's probably going to be some sort of reconciliation with your Schedule C. So if you're a 1099 employee, you're subject to self-employment. Typically, that self-employment income gets recorded on your Schedule C, and so that's what's going to have to. You're going to have to substantiate it in some way. So right now, we can figure out what we think it's going to be, but at the end of the day, the IRS or the government's going to have some sort of formalized reporting where you're going to then submit it back to them to make sure that you spent it in the way that it was expected.
Great, thank you very much. Lenore, this is, a question that has to do with, we've got business closures and school closures that don't necessarily line up. So this question from Linda is, if an employee has a child at home and schools are closed and no daycare is available, are they allowed to stay home and continue to receive unemployment even if their job has reopened and they're able to return to work? So what is that situation? You're being called back to work, but you've got young children at home.
Yeah, that's quite a tricky one, but it is one that's contemplated by the FFCRA for a period of time, assuming that they fall under all the parameters. They were hired by a certain period of time. They had so many days of work. Their employer is subject to the FFCRA. What you're going to see is that there will be an initial period where they can stay home unpaid. Then they get partial pay for a period after that. But at some point, those benefits will run out and they will have to either remain on unpaid leave or return to work if they want to be entitled to pay. And of course, that may indeed compromise their ability to get unemployment if they are not able to work out different accommodations. And like I said, there's at least one state that has looked at creating some sort of accommodation on the unemployment front in that regard. But ultimately, there is some relief. And I know particularly for single parents, this is a key issue for them is how do I manage this? How do I manage it from at home?
Lenore, I think that, the FFCRA is something that kind of like slid through and people sort of maybe didn't pay the proper attention to it because at the same time this CARES Act was ginning up. So can you just in a couple of sentences tell us what that requires so that people can understand a little better?
The FFCRA in general?
Yeah, just a few sentences on it for businesses.
So it really was intended to address the fact that many smaller entities do not offer the same paid leave requirements that larger entities do. And that's number one, why it is limited towards businesses of a certain size. What they're doing here is essentially expanding FMLA provisions that would normally not apply to those smaller entities. And that's why a lot of times you hear it referred to as EFMLA, expanded FMLA protections under the FFCRA. It essentially says that if you were employed by a certain period of time and if the employer is of a certain size and if you have been working there for a certain period of time, that you might be eligible for certain benefits based upon certain conditions. So are you exhibiting COVID-19 symptoms and are actively seeking a diagnosis and treatment for it? Then you would potentially be covered under and allowed some sort of benefit or some sort of relief or protection for your job under the FFCRA. Are you caring for someone who is under an order of quarantine by a doctor or by a local authority? Are you under an order of quarantine by a doctor or local authority? All of these also get impacted by whether or not you are able to telework effectively despite whatever limitations you have. So that's another issue for this particular, yes.
Yeah, I think that I just wanted to get, because I think that Neil has something to add on this as well.
Yes.
I think what Lenore is saying is really important. And I want to put, you have to remember, if you have fewer than 500 employees, you are required by federal law now to provide to up to 10 days of paid sick leave if it is COVID related, some of the things that Lenore's just mentioned. And if you have employees who can't return to work because of childcare issues, that can be up to 10 weeks of paid leave. Now, here's the good thing. The mandate, that's a mandate. The good news is that the federal government is going to reimburse you for those costs. And it's very specific, very clear cut, exactly what you have to pay and exactly what the federal government's going to give you as a check. But just make sure that you're paying attention to this, because you're going to get in trouble if you're not providing what the law requires you to provide.
Excellent. Thank you very much. This is a question from someone who says they're finding it hard to hire employees, which we can only think will change. There's so many people out of work, but for now they're asking, if I use a temp agency, how much of the total cost to them would be covered under the payroll cost for PPP forgiveness? I pay them directly and the temp agency pays the temp worker. So Jody, how does that work?
So realistically, that if they're not paying the W-2, right? So, and it's a temp agency, not a PEO, right? So there's a difference. If it's a temp agency, the temp agency is going to get the deduction, right? It's not because they're not their employee. So you get the 1%, right? It's a loan, but you're not going to get it forgiven because they're not your employee. It has to be your employee in order for it to be forgiven.
All right, that's sobering. Maybe Alissa, can you just give us your point of view on hiring right now? You would think it would be easy to hire. This person's finding otherwise.
Yeah, it makes complete sense. I mean, number one, I think there's a little lack of trust overall. Just the uncertainty, there's not a lot of, I would say the feeling of stableness. They're looking for that, right? And so it's going to be difficult. There are a number of positions that we're working on right now. And the number one question that we're getting is, well, are they stable? I mean, are they using a PPP loan, and is that a negative? And so they're just kind of going through the process fairly slowly. And so companies are having to be more creative. And I will tell you, they are taking this time to work on their culture, because that is what's going to help them in the end. People want to know where they're going. If they're trying to find a home right now, they want to make sure that if there's one thing, that they've got a stable culture and that they're working on that. If they don't have it, they're working on it and they can talk about it. So use that time. That's a big piece of advice I'd give. If you don't have a culture, start working on that today.
Excellent. Thank you very much. This is a question for Dan, and it's a question we get a lot. I'm hoping for a good answer. It says, once the bank has sent the approved application to the SBA, is there any way to track it or know how long it may take before it is funded? This is a big point of frustration for a lot of business owners.
Yeah, and that's a big source of frustration for a lot of lenders too, because once the application is submitted to SBA, it needs to process through E-Tran, and that's a system that was never designed to handle the volume it's had to handle in the last month. So with that said, once your submission is sent to your bank, and then the bank uploads it to E-Tran, and then they get an SBA number associated with that loan, the bank then has 10 calendar days, which it was reiterated in guidance released this week. They have 10 calendar days to fund the loan to you, the borrower. It will be a one-time disbursement, and it will be within 10 calendar days. If it's a Saturday, Sunday, or federal holiday, on that 10th day, it rolls into the next business day. But most banks now, particularly as they have cleared their backlog of loans to process, are starting to fund much faster.
Okay, good. That's good news. Thank you. This is a question about expenses that could potentially be forgiven. It's a new one to me. It asks, can expenses for personal protection be included in forgiven expenses, such as masks and gloves? I don't think that was something countenanced by. Yeah, Neil, what do you think?
No.
No. Flat out no. Yes. Dan,
Yeah.
And then Jody.
No.
Okay. Jody, is that no with an asterisk or just no?
So it's no with an asterisk, because now the PPE equipment is ordinary and necessary business expense. So it is deductible. It's just not forgiven. So from a tax perspective, you're going to get a tax benefit for it. You're just not going to get it forgiven.
Got it. All right. That makes sense. Another accounting question from Catherine. For the purposes of the forgiveness period, are you able to use a cash basis versus accrual to calculate your expenses? Let's try to keep this one simple so that everyone can understand. Can you? What choices do you have?
So I would say you're going to do it based on what you typically are. If you report on a cash basis, you're going to do it on a cash basis. If you report on an accrual basis, you're going to do it on an accrual basis. So whatever you typically are, most small businesses are cash basis. The majority of small businesses are cash basis. If you're in a place where you're in an accrual basis and you're that large of a business, chances are you're going to reach out to your accounting professional, your CPA, and they're going to help you figure out that stuff. There's so much detail in all of these laws that, you know, to give these blanket statements it's kind of hard, because you really have to know the uniqueness of each business and how all the facts and circumstances apply to their unique situations.
Although I think the advice that you basically can't switch accounting methods in the middle of this is probably
correct.
Probably good to go. Another question about the use of these funds. This comes from someone who is in arrears in their rent. Can they use the PPP to pay rent for the month before it was issued? Neil, I think we've spoken about this before. Can you pay expenses that happened before you actually got your loan?
If you would have normally paid it, so like let's say you got your loan and, you know, a week later you're paying your rent and you pay it at the end of the month of the prior month, yes, potentially. But if a situation, I didn't pay my rent in January and February, or I didn't pay it in March, now I want to pay all of that and count it for loan forgiveness, no, you can't do that.
Got it. Okay, thank you. Dan, another one here about someone waiting on their loan. It says, we applied before funds ran out in the first round and still have not got anything from our bank. They say they sent it to SBA and are waiting to hear back. What are our chances of getting any PPP funds?
So it depends on the bank. I would say there was a huge backlog of applications that were collected by various institutions between when the funds ran out in round one and when it reopened on Monday. Several of our members are in the process of uploading these documents and having these bulk submissions cleared by SBA. We're starting to see for a lot of our larger lenders that their bulk submissions that they submitted are being processed now, and all the approvals are coming in. So again, it's a timing issue. I would see what I would check with your lender, see what the status is. If they don't provide a response, there's nothing that prevents you from applying for the loan again. As I talked at the top of my opening remarks, I think there is still a fair amount of funding left. So if it's a concern you have where you can't wait for your lender to get back to you, then there's nothing precluding you from applying with a different lender. And I know there are a lot of our members taking new applications at this time.
Got it. Thank you very much. Neil, another question, and maybe our last, about sort of just the difficulty of forecasting how this is all going to go. This business is a residential contractor. They're now kind of closed to new business because they can't let anyone into their showroom. People that have already signed up to have work done with them aren't letting their employees in. So they have to furlough them because of the lack of work. How do we bring them back when there's no work for them to do? We have no new business after the month of May. And what's going to happen to our loan, which we only recently received?
So this goes back to the counterintuitive aspect of this, right? So if the question is, I got a PPP loan and I want to maximize that loan forgiveness, you have to pay those workers in the 8 weeks after the loan is originated. And so that will determine how much of that loan you can have forgiven. And what you pay them on the 9th week doesn't count under the law. What you paid them a week before you got the loan doesn't count on the law. So it's that 8 weeks. You may have to bring people back and they may not be doing any work for you if your goal is to maximize that loan forgiveness.
Yeah. Just one other question about rent relief. Someone says they have not been able to pay their commercial leases. They don't have any PPP loans outstanding. They haven't been able to get it. Do you see any hope for rent relief in another round of stimulus? Is that something that's under discussion?
This is more being handled at the state level. So a number of states and even localities have put temporary measures in place about evictions if someone doesn't pay, for example, even commercial rent, certainly the case with residential rent. I don't see Congress at the moment kind of taking this up as a broad, either commercial or residential rent relief. They did do some modest things on forbearance with respect to residential mortgages, but I don't anticipate anything new beyond what they've already done.
Okay. And just one more here for you, Neil. This is from someone who is a C Corp with their only employee is themselves, right? So one person C Corp. If they get the PPP, can they use those funds to hire a new employee instead of doing the work themselves? This person has a child home they need to take care of and so can't work full time, but they could potentially hire someone else to do that work. Is that allowed and forgivable?
So we are waiting on final guidance on forgiveness. Our operating assumption is that this is not a rule where if Neil was the employee before, Neil has to be the employee for forgiveness, in part because we understand that some people aren't coming back and you may replace them with a different person. That's a pretty unique circumstance that you just described. It'll depend on the final guidance that we get, but things like that ought to be generally allowable, but you're going to want to go back to that facts and circumstances in each individual situation before you show up at the bank asking for loan forgiveness.
Excellent. Thank you very much, Neil. And that was our last audience question that we have time for. I want to offer a big thank you as ever to Neil Bradley and the team at the U.S. Chambers of Commerce, to all my colleagues at Inc. who have worked to make these town halls possible, and of course to our panelists. Today we had Jody Padar, a CPA and Vice President of Strategy for BotKeeper, Lenore Horton, a partner at law firm Fisher Broyles, Dan Martini, the Vice President of Congressional Relations and Public Policy for the American Bankers Association, and Elisa Henrickson, the owner of Gray Search and Strategy. I'd also like to thank Comcast Business for their support in underwriting today's town hall and the crucial information we were able to bring you today. We will be continuing to follow these stories closely at Inc.com, so please check there for more updates and coverage. As always, it's a pleasure for all of us to do everything and anything we can to support small businesses. Thank you for spending an hour with us today. I hope you all stay healthy and enjoy your weekends, and we hope to see you back here next week. Thank you.